Okay, folks, welcome to Market Wrap. I'm sorry I'm getting this out a little bit late tonight, but I ran a bunch of screens and, we started seeing a scenario set up last week where momentum stocks were failing to hold their breakouts. That again resumed today, as most notably evident with CGC. Now, I did mention yesterday we may get a pullback and a retest of the breakout point, but let's face it, this is a pretty ugly day, right? We held a breakout point. Do I think that we are probably still going to head higher here? Sure. But I think that we're going to take a couple of days worth of a pause and we will consolidate. It's rare that we're just going to see a straight shot higher, and perhaps we may even break down. Who knows? But first out, best out. Let's watch and see how the dust settles. If it consolidates nicely along the support level, we'll look to get back in. Stokes are rising, RSI pulling back. Maybe we'll put in a new higher high. Maybe we won't. But we're in cash right now. Volume was big volume. Rolling over an ultimate oscillator. So I'm comfortable with the decision to exit the trade. Now, if we would have closed at the highs of the day, or even, especially if we would have taken out 56.60, which is what I was waiting for, I would have added to the trade, but it wasn't to be. So we live to play another day. Other momentum stocks I was looking at, the one up here is ICE, and it flashed an outside reversal day. That's never good, but it's not really a momentum stock per se. Names like, where's Duncan? Here, Duncan. It rallied today, but closed off the highs of the day. We have really begun to fall apart here, and I think that we're going to head lower. Domino's, once very strong, now very weak. What else? I won't even go over the FANG names. I think I proved my point there. Oh, let's check out Nike. I didn't follow up today to see how it closed, and it closed down, but possibly a retest here. So I'll quickly go over the major indexes. I have concerns here about this market, and I'll talk about what my concern is in a moment, or the catalyst of that concern. But let's first go to the VIX really quickly here. The VIX broke down today. Guess what? I don't think that this is the best indicator of the market right now. I know I said it over here. I didn't think this was a bearish day, that it held support. We closed with the lows of the day. We broke support today. Certainly a bearish day, but the charts of the averages are not looking that great. Transports look okay. They're poised for a breakout here potentially, but lower highs on Stokes, possibly lower lows setting up here. The Dow Jones extended, leaning into the third standard deviation Bollinger Band. You saw sellers move in. We saw the same thing yesterday, profit taking late in the day, and volume below average. The S&P 500, not much of a move today, and we closed off the highs of the day. No breakout above the August 29th highs. And that could all change tomorrow, but I just have my suspicions. What's changed out there? Before I go to that and answer that question, IWM, bearish key reversal, and it broke down below support today. Rising down volume. Very weak. Okay, to the proximate cause of the problem. What was up today? The banks. What was down? The utilities. What moves these two sectors? You guessed it. Yields. Yields moved again higher today by 3 basis points, which is a pretty good move, and we are closing in on the May highs of 3.11. This is a very, very powerful chart. Now, what else was up today? Gold. This is a monthly chart of gold. Gold at current is flashing a doji star formation, a sign of indecision. It's up 0.13% on the month. But what else is up this month? The miners. Now, this is a leveraged ETF, so it's up greater than gold. But if you take a look at the GDX, it's up pretty darn respectably, right? Up 1.08%. And it's flashing a bullish key reversal. Now, the month, we still have a few trading days left to go, but the month is drawing to a close fairly quickly. Back to gold. I want to dispel a myth that gold and yields trade inversely. You'll hear it. U.S. 10-year yield. Let's overlay it. And here you could see that on this quarterly chart. So a lot of data here. It's really smoothed out the noise from a weekly chart or especially a daily chart. And you can see that gold and yields frequently trade in tandem. When gold entered a bear market in 1987, so did the yield. And bonds took off. Now, obviously, back here in 2001, we had recession, we had interest rate cuts, gold took off, yields stay low, but now yields are beginning to pop up higher yet again. So, whenever you hear anyone say that gold and the 10-year yield trade inversely of each other, don't believe it. You saw it here. Let's take a look at the daily chart. So the daily chart of gold rising. Nice double bottom setup. We're still not above the 50 level yet on Stokes. That's a bit of a concern. We're holding the breakout. A lot of resistance back here. A lot of these buyers that were hoping for a breakout of this triangle formation, they want their money back. They were buying in here. Now they want their money back. RSI continues to rise and is now above the 50 level. So we're gaining momentum. Not much in terms of volume, though. So the institutions have not decided yet that gold is the place to be. Now, going back to the miners, Nugget weekly chart. At current, we are clearly above this upper band of resistance. The question is, do we stay there? Now, I mentioned in weeks past that I wouldn't look to go buying more NUGT until such time as we broke out and closed above this upper band of resistance. And it seemed like a lifetime and almost an impossibility when we started talking about it because August was just such a brutal month. Late July and throughout the entire month of August, so brutal. But here we are. We lightened up when we had to, so we could sleep. Now we're thinking tactically about how we're going to build on our position if, in fact, the shares of NUGT continue to show strength, the dollar shows weakness, and we don't care where yields go. And the argument could be made that one of the reasons why the yields are rising is because the bond market is sniffing out inflation. They believe that the Federal Reserve is behind the curve. And so you have yields rising along with gold. So what happens if the Federal Reserve turns dovish, especially ahead of midterm elections? You're going to see gold really catch a serious bid. And if the Democrats win the House of Representatives, you're going to see gold take off. If they win the House and the Senate, it's just going to rip through the ceiling. And folks, this is not political commentary. It's a well-known fact that you have a Democratic Party which has moved to the socialist camp. And they are big tax and spenders. Don't get me wrong. I can't stand the Republicans either. I'm a libertarian. The Republicans try to portray themselves as fiscally conservative, and they're not. So a pox in all their houses. But when it comes down to gold, if you have rates that are still historically low, and you have a president that is a deal maker, and you have a Congress controlled by Democrats who want more spending programs, well, then deals are going to get cut, the deficit's going to soar, the dollar's going to tank, and gold is going to rip. Simple as that. So what I'd be looking for here is a close above this upper band of resistance. I don't know whether or not we'll get that this week. We'll drill down to a daily chart. We'll see how we're setting up for tomorrow. We did close off the highs of the day. Let me not get ahead of myself. Let's finish this chart off first. Remember we were talking about the double top on ADX red, double bottom in green? It's playing out. Stokes hooking up, higher low, daily chart. Obviously a clear breakout on RSI. Stokes looking rock solid, still not above 50 yet. Here's on balance volume. Here's that double bottom setup we were watching, and we have a breakout. Now, in terms of price, I'm not going to be the least bit surprised to see a spike higher tomorrow morning, but can it hold $14 per share? That is going to be a tough one, to be honest with you. Volume rose today. Let's go to a 2-hour chart. And so you can see we have resistance here at 1389. It's going to be a rough one. We close at 1349. Again, off the highs of the day. Let's check and see how the dollar's trading right now. So at current, the dollar's up slightly. It is holding on. This is a 4-hour chart. Actually, 30-minute chart. Okay, US dollar 4-hour chart. We're up slightly in the pre-market. We are in a tightening trading channel here. So the jury is out. Let's drill down here. Let's go to a 1-hour chart. Not much happening here. China's going to open up in about 45 minutes. We should see some more activity then. The euro consolidating nicely. Let's go to a 4-hour chart. We have a bit of a lower high here. Nice sound base here. So it appears as though we are flagging out. Let's check out the yen. The yen is weak. All right, so the euro seems to be firming up here, and that's causing the dollar some trouble. So back to the charts. Daily chart. The jury's out here. We may rally tomorrow up and into this $14 per share level. If we close above it, that's really, really good stuff. Let's take a look at the short ETFs. Take note of SPXS. Possible double bottom setup in a higher low. Same deal here on RSI. Same deal here on price. I'm not ready to go buying it yet, but this is an interesting setup for the SPXS, which puts you short of the S&P 500. The SOXS, which puts you short of the semis, we booked profits here the other day. It continues to consolidate. Stokes are hooking up again. So I began the commentary off with, I'm undecided about this market. I'm getting the feeling that, yeah, we're moving higher, but for the wrong reasons. And I think that what could be the catalyst that takes it all down is a breakout in yields. So let's keep an eye on the 10-year yield, folks. That's it for tonight, and I will talk to you tomorrow. Be well.